Hi, welcome back to my morning report chart appraisals on Thursday, the 14th of August, with me, Richard Perry, market analyst at Handtech Markets. I'm going to move on to sterling dollar now, and what a turnaround we saw yesterday. We initially saw in the morning an attempted breakout above this downtrend. And that was completely turned around yesterday by the quarterly inflation report at the Bank of England, in addition to the unemployment data. A complete turnaround with the certainly the doves on the MPC looking like they're still in control, and investment banks are now pushing back their expectations of rate hikes on the sterling. So big decline yesterday, the biggest one-day fall since actually all the way back until February. In fact, if I just zoom out here, that you can see the decline that we saw in February, which was that one there, 3rd of Feb. So yeah, a huge bearish day that we saw yesterday. And the selling pressure is still back on. I mean, there's nothing really positive about this chart in any way at all now. You've just broken below that $1.67 area of support that had been peaking, being used as peaks, then basis of support all the way through, and then bang yesterday, and today it's now been broken. Now that opens the next real support that comes in around 65.50, which was the April low. But to be honest, you wouldn't be confident about any other support really going now, because once that support 67's been breached, that was a big support, and it just looks like the bears are beginning to grasp control of this now. The downside momentum is still very strong. The RSI is falling back into oversold, but to be honest, that would suggest, I think, just the strength of the trend that we've got. MACD lines are very weak, and also the stochastics as well. So certainly these indicators are suggesting further downside. You may well get a technical rally at some stage. It's probably going to be seen not. I mean, just trying to figure out when. I mean, there's nothing really in the pipeline in terms of the technicals anyway. Now you'd say that it's a very weak chart, and the levels that you'd need to get above in order to turn this more positive are getting quite big now. 68.40. I mean that rally high from yesterday, that would need to be taken out to even suggest any sort of a sustainable recovery in sterling. You've got so many resistance levels now, and they're quite a long way up as well. So 67.55 seems to be a bit of a resistance area, having been an old support in the downtrend. But to be honest, the momentum and how this chart is looking at the moment is incredibly weak. There is scope, as I said, for a recovery, and it may well be seen because the RSI is so oversold, but I don't see that there would be any sort of sustainable move in it now. I think that that's been fairly well just denied by yesterday's price action. So I think this sterling chart looks like it's going to be heading lower, certainly in the near term anyway. Okay, so I wish you good luck in your trading today, and I will speak to you later. Thank you.